Oh man, a powerful week for the crypto bears as we run into the next week, which is going to be a very, very important week. Check out here on the weekly candles. Last week, we were up 11.4%. The bears have taken this week so far. 14 hours to go before the close of this weekly candle, and they've retraced us back down 4.3%. But more importantly, you can see from my horizontal dotted line here, we are struggling at the much important 24.5 to 25,000 resistance level. Does this now mean we're not going to break through? Loads of people are getting really worried about a big pullback back down to some of our lows and beyond. You've got all the bears climbing back out again. Told you we're going to head down to 10,000. Let's break this down rationally. Let's take a look at the key levels. Smash up the lights. Let's get straight into this one, guys. Now look. This is a very, very tough level. We've spoken about it before. I mean, you can just clearly see from this structure, when we started to collapse here from about 46,000 plus, 48,000 was the peak of this candle where I'm pointing right now. We just fell drastically, and we did not really stop falling until the lows of 17,600. That's noted. We then rallied a little bit back up, and that's where we met resistance at this 25,000 level. So that's where this resistance became a key level for us to have to break through. Because once we clear this level, once we get through this gate, what happens? You have a big gap to fill. And that is why it's no surprise here that 1, 2, 3, 4, 5 weeks here, we've been trying to knock on this gate, right? We started the year off very strongly. And now, over the last 4 weeks, 3 of them have been red. But look how big that positive green candle is. The bulls are still about, and they're there with good volume. But do not expect the bears to just capitulate. Do not expect the bears just to disappear and let us get all the way back to 30,000 and 35 and 40. This is going to be a key level. Layer on top of that, the fact that we have this EMA ribbon. And you have to understand from a technical perspective, this is not supposed to be easy. We're running into major weekly resistance that has been culminating. Because the reality is, if you look at the EMA ribbon here, this has not flipped since when it originally turned around this period. So when we fell on this candle in April 2022, okay, so nearly a full year, the bears have controlled this extent. And not just controlled this trend, but they've controlled it to the extent that we have been hugely extended away from our EMA ribbon. It got stronger and stronger. You know, when you look at the ribbons here, and the ribbons are expanding, we go through this in the TA course, completely free, ijaz.uk/TA. Go and learn this, how to set up the EMA ribbon, what it means. But when it extends, it means the trend is getting stronger and stronger. So what have you noticed? From this period here after Terra Luna collapse, when we hit 17,600, we started moving a little bit sideways. We were making progress towards that EMA ribbon, and then boom, FTX froze us down to 15,500. So we continue being extended away. Then we worked our way sideways and finally had a really good January 2023, running us into our EMA ribbon. Now you can see that the EMA ribbon just slightly starting to contract, right? It's starting to get a bit tighter, not like it was here, where it's expanding. It's now starting to contract, and that's a good sign. We need to contract that EMA ribbon, and we need to take this level back again. We then need to take a look at the volume profile range. Because we know, I mean, I just want to, the reason I'm making this video is to show you guys that this was supposed to be a difficult level. Those screaming that, oh, the bears are back, the bulls are in trouble. No, the bulls are doing what they need to do and the bears are doing what they need to do. Sometimes you just need to let the market play out. You don't have to be that anxious person that has to do something in the market. I have to do something. I have to change my opinion today. No, you don't. You can hold your conviction, be patient, be pragmatic. Now, I know that's not sensationalist, that's not great in terms of gathering attention, right? Oh no, because, you know, to gain attention, either Bitcoin's going to 10,000, I've got to scream that, or I've got to scream that Bitcoin's going to 100,000. Well, guess what? Neither, right? Neither. We're fighting for a key level. The bears are strong here. The bulls are strong here. We need to see what happens. I don't know the answer, right? It's a reality. Other TA guys won't tell you that, but what we can do is start to stack the probabilities. And you can see here the volume is huge. The volume is huge at this level. Once we clear this level, what do you notice? Volume dissipates. So not only could we see that we regain our EMA ribbon after this level, not only can we see that there's a big gap where we fell, which we can reclaim if we get through this level, but you can see from the volume profile range that this is a key level as well, right? So that's 2 things I've shown you. Let's also bring out the Bollinger Bands. Where are we? Oh, look, what a coincidence. We're facing the resistance from the top of our Bollinger Band. Again, we go through this. ijaz.uk/TA, completely free TA course. It's free. I'm not charging you tens of thousands of pounds. It's free. Take advantage of it. But please don't procrastinate. I was actually saying to one of my friends, I might not make it for free. I might just put like a nominal amount on it because people just procrastinate. When it's free, they're like, oh, we'll be there forever, or I'll do it another time. People don't value stuff until they pay for it. And that's one of the psychological things. It's true. Every human does it, right? But guys, just because it's free, don't procrastinate. Click the link. Actually go for it. It might not be free forever, right? I might take it down. I'll put another free course up, but maybe you'll never get that technical analysis one. So definitely work for it. Take some notes. So you can see here, we're running into our Bollinger Band. Now, when you run into your Bollinger Band, what's the immediate risk? The immediate risk is you get rejected. And where can you get rejected to? Well, the first point, of course, the middle of your EMA ribbon. Now, that sounds nasty, right? That brings you down to 19,600. So these levels are in play. I don't want anybody to think that I don't think Bitcoin can fall back below 20. It can, right? But that's the realms of the Bollinger Band. Where's the bottom of the Bollinger Band? That then falls down here at 14,000. I think that's less likely. Right? I think it's going to be very tough for the bears who have shown not crazy strength here to push us back down to those 15,500 levels. That's where I'm at. And also, when you layer on the macroeconomy, we're not there anymore. The perfect set of ingredients which drove us down to 15,500. Remind yourself of the concoction of ingredients we had. Inflation out of control. Russia-Ukraine war raging. Right? Jerome Powell raising interest rates 75 basis points every time, with people fearing he could be doing 100 basis points. No sight of when he was going to pause, right? Worried about unemployment getting to 5% and him potentially triggering a recession. We're in a very different place right now. And then on top of that, you had the FTX collapse, right? It was a very tough year. And so to recreate that bearish scenario, what's on the horizon? The only biggest risk to us on the horizon, which you have to be cognizant of, we've spoken about it a lot over the last week or so, is this fear, which the market is starting to see over the last few days, that we have entrenched inflation, entrenched sticky inflation, where this last bit of inflation, well, not the last bit, but the 5% of this inflation is just going to be with us for many, many years. And that will fear markets, because then it's going to remind them of the Paul Volcker time, the old Fed chairman, who had to go and plummet into a deep recession to get rid of inflation, creating masses of unemployment. That is the fear, okay? That is what you need to keep on your radar. It can happen. It can. But right now, everybody's saying, okay, look, we had a bad January. PPI, CPI, PCE, we had a bad January. It is what it is. Seasonal adjustment. We're seeing the lead measures. They're starting to fall. Now it comes to February. If February is sticky again, what narrative are you going to start to believe? If February quickly comes back in line again and we have good numbers in February, the market's going to take a deep sigh and breathe out, okay? So let's do this. Let's take a look at the Fed rate monitor tool, and you can see here it's just easing up a little bit. At the peak last week when we got the PCE data on Friday, you saw this spike up above 30%, almost 33% at one point. Just notching down a little bit, but still a quarter of the market is expecting that 50 basis point rate hike. And we need to be very, very aware of this, because this is what's going to drive the market between now and the next FOMC meeting on March the 22nd. Take a look at Fear and Greed Index, and you can see this is sitting at 51, okay? So markets are starting to notch back a little bit. This was as high as in the 60s. You're now back into that neutral. A little bit of that greed which came in the market just gone away, and that's perfectly healthy. Remember, every time Bitcoin takes a leg up, a little bit of tourists come in, and those are the ones that are going for leverage longs, and they create that volatility in the market. So you have to be very, very careful. Let's now switch over to our daily chart here, and I'm going to switch over to the 4-hourly actually. And in the 4-hourly chart, you can see here very clearly rejected from this 25,000 level, lost support at 24, now free falling here. Around a bit of support that it's found around this 23,000 level, you're seeing here just recovery after a bit of support from the 23,000 flat, now sitting at 23,200, fine. Now what am I looking at here? In fact, let's just zoom this up to the daily. Let's look at it from this perspective here. What am I looking at? When you look at this trend from bottom here all the way to the top, we've got higher lows and higher highs. So the critical thing right now for Bitcoin is to turn around. Just turn around and make a higher high. I know that sounds easy, but that's what we need to be doing right now in order to get out of this mess. Now, when do I start to get worried? Well, the structure starts to break down if you start getting as low as the previous low, right? Even that's okay. You can be creating a bit of a double bottom and you can work your way out. If it falls even lower than this 22,000, which is the top of our channel, remember? This 22,000 here, green line going horizontal. Then that's not good. Then we get lower low, we can create a lower high, we can start downtrending back down into the 20,000 range and below 20,000 on this green line here where my cursor is. Okay, so that's what I'm looking at right now. So where we are right now, there's very little reason for me to panic. Just like I didn't panic at this point, I will not panic at this point, right? There's no reason to just yet. We've not broken structure. We had a huge move, we consolidate. Huge move, we consolidate. At this point, I'm saying, guys, I'm not chasing green candles. This needs to come to its EMA ribbon. And guess what? La-di-da-di-da, a couple of days later, boom, straight into our EMA ribbon, everybody panicking. It's okay. This is the consolidation. This is where the smart people will be buying the dip from positions of strength. Oh, look, boom, off it goes, creates its higher high. Happy days. Now people are buying in, FOMOing in. No, we don't chase green candles up there. You should have bought in here, right? So you let it go, la-di-da-di-da. Oh, look, what a surprise. Bears are stepping back in, push us into our EMA ribbon. And this is now where I want to be looking to add to some of my positions. Now, I want to wait for it to get a little bit deeper here into the EMA ribbon. Like, this was quite deep into the EMA ribbon. I want to wait for it to come a little bit more if we do get that. We may not get that, but I'm okay with that. I've had opportunities to dollar cost average in. If I was desperate to, I would have nibbled in these areas right now, touching the EMA ribbon. Okay? This is healthy. Until we lose that EMA ribbon, there's little to be worried about here on the Bitcoin chart. Let's also then jump into our trusty dollar index. And this is partly what is causing the pain, right? That remember, the dollar index here has been on an absolute tear. I think a lot of people are forgetting here that the dollar index from the 3rd of February is up 4%. That is very meaningful for the dollar index, which remember, historically over the last, well, I say historically, I mean over the last year and a half, 2 years, has been heavily correlated to crypto. Right? Crypto has been inversely correlated to the dollar index. When the dollar index goes up, when risk goes off, crypto struggles, right? Because less money is flowing into risky assets, and crypto is classed as one of those. Now, we've seen moments of decoupling, okay? We have covered that off. There have been days where there's been decoupling, but do I suddenly think that crypto is now completely uncorrelated with global risk on assets? Of course not. I still think that correlation exists. And so we have to keep this dollar index subdued. Now we have to accept on the daily chart, we've lost it. It's bouncing. So we're going to have to flick up to the weekly and say, what is going on here? And that is where you start to get the shock. We spoke about this a couple of days ago, but the dollar index closed above its weekly EMA ribbon. Okay? So what this is telling me is, guys, be ready for some more pain. Be ready for more to happen. I mean, if you look at the US markets, 1.69% down on Friday. You saw the S&P down 1%. You saw Dow Jones, a safe bit, down 1%. It's the worst week of 2023 for the traditional markets, and the dollar index and fears are starting to notch back up. Look at the 10-year treasury here, bouncing back, creating a double bottom formation, bouncing off of its weekly EMA ribbon. Do not be surprised to see this go try to make a charge back towards that 4% mark, right? We're just shy of 4%, and the highs of this on the body candle closes are 4.2. Again, people rotate to US government bonds when they want the risk-free rate of return, when they're feeling like taking less risk. Crazy time in the market right now, but hopefully that video there gave you a little bit of perspective on where we're at. We don't need to be so controversial. We don't need to say, oh, Bitcoin's going to 100 or Bitcoin's going to 10. No, we just got a nice, good, fair and even fight at that $25,000 mark. And that is very normal in the dynamics of the market. Let's see who's stronger. Let's see who deserves it. Let's see if the bears can defend that level, because I know one thing for sure. If they can't, the bulls are going to break through that, and there's a huge gap to fill. And this market can move very, very quickly. Let me know what you're doing in the comments below. Don't forget to smash the likes. Don't forget to subscribe. Go check out this video here, and I'll see you in the next one.